This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 8/26/22, show number 418. Well, Powell has spoken and the markets are reacting. It's all about stopping inflation. That's all he cares about for now, Nick.
Well, he certainly made that pretty clear today. In fact, he gave his speech from Jackson Hole, Wyoming at about 10 o'clock this morning. It really wasn't much of a speech. It lasted about 6 or 7 minutes. It was more like a statement. And he reiterated his hawkish stance in Jackson Hole. And remember, everybody last month, when we started to get that rally around the summer solstice, was saying the Fed is going to pivot, the Fed is going to pivot, the Fed is going to pivot. That's all we heard. But today, he remained with his hawkish stance. And, this is where we are right now. The markets are down significantly today. You have the S&P 500 down 2.3%. The NASDAQ is down nearly 3%. And the Russell 2000 is down over 2.5%. So it's a pretty good sell-off today, and it's a broad-based decline at that.
Well, I believe he's going to pivot, and it's just not when anyone thinks he's going to pivot. He's only going to pivot when he's got to pivot. For now, he can just sit back and act the tough guy, but at some point, he's going to have to change course.
Yeah, and don't forget, he just had a big rally, right? So, if you look at the S&P 500 index back in June at the lows, the low on the S&P, I believe, was around 3,600. We just went back up to 4,300. So he's got some wiggle room in here to talk tough, right? He doesn't want the market to go overheat too quickly. So he definitely put that tough talk man stance up there today. And, the markets are reacting, and we've had a pretty good sell-off today overall. And, some of the biggest losers today are in technology. Tech has been, a big winner from that June rally up until last week. And today we're seeing all of the mega cap tech names, Alphabet, Apple, Amazon, Microsoft, they're all down significantly. And as you know, this group carries a lot of weight in this market.
Yes, it does. Well, we have to go back to the functions of the Fed. Number one is to ensure that prices remain stable, whatever that means. Number two is to help optimize employment in the country, full employment. So those two goals right there are mutually exclusive. And then you add in the third, which they assumed over the past 20 years, which was to always keep the stock market rally going. And you wind up with a Fed that really can't do anything. So they've kind of dropped that third point for now.
Well, to his credit today, he did say something that we haven't heard in a while. He said that the market hasn't come under pressure like this regarding inflation in over 15 years. And, that was a fair statement. But remember, this is the same guy that was telling you that inflation was transitory for 2 years, right? So, take where it's coming from. I've been pretty consistent saying the Fed is going to have to continue to raise rates. I think that's where they're going with it. And, they haven't even begun their quantitative tightening yet. That's still on the table. That's still coming. So they're going to do a quantitative tightening of $95 billion a month. I mean, their balance sheet is over $9 billion. So they still got $9 trillion, excuse me. $9 trillion. I'm just not used to saying the T word that often. And, again, they have a lot of work in front of them.
Yeah, that they do. Well, we'll see how long all this goes on for. I'm a little skeptical, but I guess as long as money is flowing in from Europe, flight capital, that gives the Fed a lot more leeway than it would otherwise have. So
it does. When you get those capital flows, it definitely is probably supportive of the market here going higher. But again, when rates have to go up, that's going to tilt the world into recession. It's not just tilting the United States into recession. And I think the central bank is painted into a corner. They don't really have much choice. what they're going to do here. So it'll be a while before they can pivot or do anything that they've been accustomed to doing over since 2009.
Right. And things in China looking really bleak. Their housing sector, it looks like a repeat of what happened here in 07, 08, and 09, where the sector melts down and the full effects of the meltdown aren't really appreciated for a period of time. And then it kind of cascades. It spreads into everything.
Yeah, and they have big issues. They've had big real estate problems now for a while. They're also facing a drought right now too, which is, rather remarkable that you may not get goods, going to port, and you may not be able to use the waterways anymore like you used to. So there's big problems all over the world. This world's upside down. It's been upside down. Now it's starting to look more like a scrambled egg.
Hey, and don't forget, the Chinese are like, student loan debtors here in the U.S. They just don't want to pay. They're in a boycott. And so all these things converging here. Well, gold certainly hasn't been exempt from this downturn, has it?
No, gold is getting hit today. You have gold down about, looks like at the moment at least, I'm showing it down about 1.2%. It's a pretty ugly decline any way you slice it or dice it. Gold miners, it doesn't matter. Really nothing is being spared at this moment. So, it's almost like the baby is being thrown out with the bathwater today, so to speak.
Or with the Bitcoin. The baby is being thrown out with a Bitcoin.
Well, if you look at Bitcoin, that's really getting hammered today. That's down 4.5%. Still above that 20,000 level, trading at 20,633. But, we've talked about this for so long that the Bitcoin pattern is weak. I think this is finally the pattern that is breaking, and it probably takes this thing to sub 14,000. And I don't even know where the bottom is going to be on that. But I do expect Bitcoin to really go a lot lower from where we are now.
All right. Well, we wanted to get this in today because of the Jackson Hole pronouncements that were coming down the pike, and we've done that. And I guess the next thing to do is to say that we'll see you on Monday. In the meantime, go over to Nick's site, inthemoneystocks.com, and you'll see how he's beaten the averages for decades, and the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz. And of course, your emails are welcome. Send them to kl@kerrylutz.com and let us know. Were you poised? Did you see this decline coming? Did you know what Jay Powell was going to say before he knew it? Well, some of you did, I'm sure. Just send your email to kl@kerrylutz.com. Nick, we'll talk to you on Monday.
Sounds good, Kerry.